Good morning, students. The agenda of our today's discussion is accounting equation. First of all, judging by the name of this topic, you all must be wondering that this topic has something to do with mathematics as it contains the word equation in its name. Well, if that's the case, then my dear friends, you are absolutely correct. Accounting equation is when we describe the relationship between various elements of accounts by the means of a mathematical expression. Like every equation has a left hand side and a right hand side, accounting equation also has these two sides. Okay. In accounting equation, the left hand side represents all those resources that the business owns, whereas on the other hand, on the right hand side, we have all those resources that are not owned by the business but are owed to somebody else. Okay. If it is owed to some third party, it is liabilities. If it is owed towards the owner of the business, it is capital. Now what am I trying to say is, let us try to understand this with the help of the equation given in front of us. Okay. So in accounting equation, we have been given with this kind of equation. Our subject provides us with an equation that has assets on the left hand side and the sum total of capital plus liabilities on the right hand side. Okay. Now before we dig further deeper into this topic, let's try to look at what do we mean by assets. Now, as discussed, assets are those resources that are owned by an entity. Now, by an entity, we mean business. Okay. An entity can have various different kinds of resources. Those resources can be tangible, like building, machinery, plant, okay, land, or it can be intangible, like goodwill, copyright, trademarks, patents, etc. Okay. So, all those resources that a business particularly owns is known as assets. So on the left hand side of the equation, we put assets, and on the right hand side, we try to equate it with a term which describes or which represents the owings of the business, or whatever obligations that the business has to fulfill that are monetary in nature. So on the right hand side, the initial item that we have is capital. Capital are those resources which are provided by the owner. Okay. That is why sometimes they are also known as ownership interest in the business. Okay. So an owner in a business is a person who brings together all the resources like man, machine, material, market, all the resources he is bringing, and he is starting a venture, and with that venture he seeks to earn some profit in the future. Okay. So whatever that person or whatever that owner person brings to the business is known as capital, or it is known as his contribution, or it is known as owner's contribution to the business. Okay. In some of the materials, you might see that this term capital will be represented by the terms ownership interest or equity in general. Okay. Now, in the next item on the right hand side is liability. Liability is something that the business owes, or the business has an obligation to pay towards some other third party. Okay. These are those resources that are generally borrowed from the third party and are to be supposed to repay it back in the future after fulfilling certain conditions. These resources can be in the form of bank loan, they can be in the form of bank overdraft. You might have also heard about the term debentures, that's also a liability. Then we have trade payables, outstanding expenses. Now, these are some other kinds of liabilities that we will discuss in very much depth in this chapter. Okay. Now, before we move ahead with the practical portion, or before we begin solving and try proving the accounting equation in general, let's try to look at the genesis of this accounting equation. From where has this accounting equation been evolved? Okay. So similarly, like if I have to bring it down to some simple terms, I would say assets in the balance. You all might have studied about balance sheet. I am assuming balance sheet is something which is somewhat clear to you. A balance sheet is a statement or a position statement which shows that how much the business has in terms of resources, like how much the business owns and how much the business has to repay, or how much the business has to return, or the obligation which the business has to return after a period. Okay. A balance sheet basically shows the position of these two items and how these two items are equal to both of them, like how are they equal in terms of their magnitude. Okay. So assets are always equal to liabilities. You'll always find that in a balance sheet, total assets are equal to the total liabilities. Okay. So we will start our accounting equation. We'll start the basics of our accounting equation with this very own equation which says assets are equal to liabilities. So now I have a narrative in front of you, which we will take a help of this narrative, and we'll try to understand in greater detail what is accounting equation and what all we are going to develop through these accounting equation, like what are the financial statements or what are the different various kinds of accounting statements or accounts or ledger accounts that we are going to derive with the help of these statements. Okay, so initially let us take an example of Mr. A. Mr. A wants to start a rice grain business. He wants to plant rice and he wants to he wants to grow rice and he wants to harvest that rice and he wants to sell the produce in the market. So Mr. A started a business with 10,000 pounds. Let us assume that Mr. A has borrowed this money from the bank. Okay, he has no money right in front of him, like he has no money with him right now. So he is borrowing something from the bank. So in this case, I can say the 10,000 pounds in cash or in the terms of bank, it can be in the terms of money which is in the bank is with him. Okay, this is something which he owns right now. So I can say this is his asset. Okay, and similarly, this 10,000 pounds belongs to the bank. Like this is supposed to be repaid back to the bank as it is as it has been borrowed. So if we borrow something, it is our general perception that we have to repay it back to the entity from which we are borrowing. Okay, so in this case, I'll say 10,000 cash is the asset for Mr. A, and there's a similar amount of loan which has been borrowed by him. Okay, so I can say that my accounting equation or my simple equation, like the equation that I'm talking about right now, stands at cash of 10,000 pounds, which is equal to the loan of 10,000 pounds only. Okay, now if we go further in this equation, we'll see that Mr. A puts in 5,000 pounds from his own side. Let's say Mr. A arranges some money from his own side and he invests his own money into his business. In this case, the cash will rise up and the cash will reach the amount of 15,000 pounds. Okay, and then in the same equation, we have 10,000 pounds as the loan. Okay, now Mr. A is bringing 5,000 pounds extra from his end. So I can say this is the amount of capital, or this is the contribution that he is bringing towards the business. Now if he is bringing something into the business, can I say business as a separate legal entity has to pay back this amount back to Mr. A after a period of time? Let's assume the period of time is when the business shuts down. Can I say whenever the business shuts down, the business is supposed to pay back this 5,000 pounds back to Mr. A? Yes, you all might be wondering, that's what we have learned about capital. Actually, that's correct. Okay, so we'll try to understand these two items with the help of an example of liabilities. Now, in general perception, we call capital as the internal liability, and any other liability which is arising out of a third party is known as an external liability. Okay, so a business has two kinds of liabilities. One is internal and another one is external. Internal is when the business is supposed to repay or the business is supposed to give back some money, or some, the business is owing some part of the finance or some money, and that is to be repaid back to the owner. That is internal liability. And anything that is to be repaid back to some third party, like if there's a creditor, if there's a bank loan, if it's the public from which the deposits, like in terms of debentures, have been taken. So if any other third party is there which is not related to the business and the business owes some money to that third party, in this case we call this as an external liability. Okay, so the business has these two kinds of liabilities which are shown on the right hand side by the name of capital, which is the internal liability. As you can see in this case, the business of Mr. A has a capital of 5,000 pounds, and on the right hand side only we have 10,000 pounds in the form of loan. Okay, so now you can all see that the cash of 15,000 pounds, 10,000 from the bank loan and 5,000 from Mr. A's own end is the cash. It's the total amount of cash that he has right now. And on the other hand, on the other side, he has a loan of 10,000 pounds and a capital of 5,000 pounds. So if you try to equate these equations, you will find that the left hand side's total, which is 15,000, is equal to the right hand side's total, which is 15,000 pounds again. Okay, now let's try to take this a little bit further. Let's say Mr. A went to the market and for his rice grain field or for his rice plantation, he bought rice seeds. Okay, he used in the entire sum of money that he has and he bought seeds worth of 15,000 pounds. So now can I say this purchase of 15,000 pounds is something which Mr. A has in the form of seeds? Can I say that Mr. A in his inventory or in his stock has 15,000 pounds worth of seeds? Yes. So I can say that 15,000 pounds worth of expenses have been incurred to get an asset which is in the form of inventory or which is in the form of stock with Mr. A. Now Mr. A again has used these liabilities, or he has used these resources that were somewhat borrowed from the bank, and to some extent it was taken from Mr. A only. Okay. So he has this loan and he has this capital of 10,000 and 5,000 respectively. So now I can say that my equation can also be considered as purchases of 15,000 pounds is equal to the liabilities of 15,000 pounds, being 10,000 as loan and 5,000 as capital. Now let's assume that Mr. A plants this rice seeds and he produces rice grains from the field. If Mr. A has produced rice grains from the field, after some point of time, after cultivating those plantations, he will get the rice produce. Now this rice produce is ready to be sold in the market. Let's assume Mr. A quoted a profit of 3,000 pounds on this entire produce and sold this entire produce at 18,000 pounds. Okay. Now in this case, can I say that Mr. A will be able to arrange cash of 18,000 pounds by the sales of that particular product, or that particular produce? Yes, we can absolutely say that. So in this case, our left hand side will get increased by the cash of 18,000 pounds, as cash is an asset for us. Yes, this is the resource that the business owns. So cash on the left hand side along with the purchases will make the total of 33,000. Okay, we have cash at 18,000 pounds and purchases at 15,000 pounds. So this total on the left hand side will go up by to 33,000, and on the right hand side I can say that loan, capital, these are the two liabilities that I had. Along with these two, I have the figure of sales, which can be said as an income. Okay, which can be considered as an income. I'm also getting an income because of the transaction that I've done into the market. Like I've quoted a profit of 3,000 pounds and then I've sold this. So now, is it fair to assume that sales is something which comes on the right hand side? Why? Because it has the same nature. Like you all must be knowing that assets have a debit nature. Along with assets, expenses also have a debit nature. Yes, we can see purchases is an expense, right? So it also has a debit nature. So we are putting all these two items on the left hand side, and on the other hand we have loan, which is nothing but a liability, and we all know that liabilities have a credit nature. Okay, and capital, which is also another form of liability, but keep in mind this is something which is internal to the business. So this is internal liability of the business. This being a liability also has a credit nature. Yes. Okay. So liabilities in both the cases. In the first case it was an external liability, in the second case it's an internal liability. And similarly sales, being an income, okay, being income or being a source of revenue, also has a credit nature. So now what am I trying to get on is, all the left hand side items will be recorded in the form of assets and expenses. Okay, and all the right hand side items, or all the right hand side heads of accounts, which are in the form of liabilities, incomes, they all will be recorded together, and the sum total of these elements on the left hand side and on the right hand side will always be equal. So judging by this equation, now if I want to calculate my profit, I can say that my profit is of 3,000 pounds. Like I sold the goods in the market worth of 15,000 pounds in 18,000 pounds. Yes. So now if I subtract this, if I subtract the seeds worth of 15,000, the grains worth of 15,000 pounds from this 18,000, I can say that I have arrived at a profit of 3,000 pounds. Yes. So using the same equation, we were trying to devolve, or we were trying to reach at a new equation, which is profit is equal to sales minus expenses. Yes. So if we replace the purchases and sales in the equation with the profit, basically what we are trying to do is we are eliminating the expenses and we are eliminating the incomes. We are using the term profit. We are trying to show that our incomes are higher than expenses. So we are trying to show that our profit is shown on the right hand side. Okay, on the side where we record all the incomes. So profit is being an income is shown on the right hand side. So I can devolve a new equation, which is assets is equal to loans plus capital plus profit. this means that there's a cash in my business which stands at 18,000 pounds. And for against that cash, I have borrowed 10,000 pounds worth of bank loan initially. Then Mr. A also invested 5,000 pounds, and now he has earned a 3,000 profit on the produce that he has sold into the market. Yes. So I can say that this equation now has reached to a point where we have inculcated, along with the assets and liabilities, we have inculcated expenses. We have inculcated the effect of expenses and incomes by stating the profit into my accounting equation. Okay. I hope this much is clear to you. Now let's try to take a further step ahead in the same example. Let's try to see what else is happening in the example. With this 18,000 pounds worth of cash, I can again buy these rice grains or these rice seeds, okay, and then I can again plant them and I can again grow the rice produce, and now this 18,000 pounds worth of seeds will give a produce which can be sold at a price of 22,000 pounds. Now can you spot that there's an additional profit of 4,000 in the very same transaction? Okay, by this I can say that at the very end of this transaction I'll have 22,000 pounds in terms of cash with me, and no rice grains will be left with me. Like I've sold my entire produce at a price of 22,000, and now I have received 22,000 pounds in cash. Okay, so this equation will reach to a certain extent where I can write my cash is now standing at 22,000 pounds, which was earlier at 18,000 pounds. Now I have made an additional profit due to which the cash stands at 22,000 pounds. I have the same kind of loan with me, the bank loan that I've borrowed initially, and I also have the capital amount that Mr. A has invested into the business. But earlier my profit was only 3,000 pounds in the previous example or in the previous step. But since I have repurchased all the rice seeds and I've done all the plantation again and I've sold the entire produce again into the market, because of that additional transaction, I can say that I was able to make a increment in the profit or a new further fresh profit of 4,000 pounds. So my profit will shoot up to 7,000 pounds in the very old example. Okay, so this basically represents that the accounting equation is a never ending process. It will have it like whenever the business enters into various different kinds of transactions, the accounting equation will change as per the transactions. Like if something is to be increased, another thing will be decreased, or there might be instances where two things will increase at the same time, and there might also be some instances where the two things will decrease at the same time. Okay, is it clear? So I can say that if I want to summarize the entire, if I want to shrink the entire transaction, I can say that my profit can also be calculated as if my sales was, in the first case it was 18,000 pounds, then in the second case I did the sale of 20,000 pounds, which shot up my total of sales at 40,000 pounds. Because of this my sales were of 40,000 pounds. And in the first example I took the expenses or the cost of sales or the products that I'm selling into the market, the rice produce. I was able to grow that rice produce in the first step at 15,000 pounds, and at the next step at 18,000 pounds, which shot up my total at 33,000 pounds. So now I can conclude that I am able to generate 7,000 pounds worth of profit in this entire chain of two transactions. Okay, so what am I trying to say is, with the help of this equation you can take various heads and you can develop various equations, and you can prove that in certain cases assets are equal to capital, and not in certain cases but yeah, in all of the cases where transactions takes place in accountancy, assets are equal to capital plus liabilities. If you want to reach at assets, what you have to do is you have to take the total of loan plus capital plus profit, which will also show the total of liability side. Or I can say profit is something which the business owes towards the businessman. Yes, like business has to return the capital to the businessman. Likewise, profit is something that the business is making on behalf of the businessman. The profit is also to be surrendered to the businessman. Yes, so I can develop a new equation which says assets is equal to liabilities, and liabilities can be further explained into the internal liability, which is capital, the external liability, which is bank loan in this case, and one more additional part, which is the reserve, or which is the profits that the business is earning, and those profits are again to be surrendered back to the businessman. Yes, so I can say I can develop a new equation which says assets is equal to loan plus capital plus profit. And similarly, if I want to calculate profit, I can say that the profit can be calculated by taking total sales and I can deduct the total expenses or total cost of goods sold. Okay, the total cost, like you all might have studied. This is a very simple equation that you all might have studied in the elementary school, where we have studied profit is equal to sales value minus cost value. Okay, in terms, if in words, if I would like to express it, I would say profit is the difference between the sales value and the cost value. So now what am I doing is I am taking the profit as it is only. The sales value is being replaced nothing by nothing but the sales only that the business is doing. Okay, we are taking the sales only, and the next thing that we are deducting, or we are taking the difference of with the sale, is the cost or the cost of goods that are being sold into the market. Or can I say these are the total expenses that I'm incurring on these item of sales. Okay, so sales minus expenses will give me profit. Okay, this is the three kinds of equations that we were able to develop. Like you can see, I have written these three equations that we were able to generate with the initial equation that we had on our hands, which was assets is equal to capital plus liability. Now based on these three equations, like you all might have seen, we took the first equation, then we took an example, and we went on building up that example, and we tried to get some more equations from that very own equation, the first equation. And based on these three equations, we will be learning about the various accounts that we are going to study in the main course of our due course of our subject. Okay, so in the very first example, in the very first equation, we can say that this equation will help us in preparing a trial balance, which is nothing but a statement that shows that all the heads of accounts have a certain nature. Some have debit, some have credit, and the sum total of all the debits is equal to the sum total of all the credit. Okay, like you also might have studied in accounting concepts and conventions, that there's a principle, duality principle, that says that for every debit there is equal and opposite credit, and vice versa. Okay, so the trial balance is a statement which is built up or which is prepared on this very own concept. Okay, and in the next thing, in the second equation, we can use this second equation to prepare nothing but the statement of financial position, statement of financial position, which is nothing but the balance sheet. You might have studied or you might have heard this term balance sheet. Okay, so we will also try to prepare the balance sheet along with the equation that we have derived just now. Okay, and the last equation will help us to prepare an income statement, which is popularly known as nothing but a profit and loss account. Okay, all right. So now, before we jump onto the practical or the technical aspect of how accounting equations are solved, I would like to summarize what all I have said till now. Okay, so a business can have various heads of accounts, like it could have assets, it could have liabilities, it will have some expenses, some liability, some incomes are going to be there. Okay, and the capital is also going to be there. So accounting equation is when you express these mathematical heads, the relationship of these accounting heads in the way of mathematics by expressing an equation. That particular equation is known as accounting equation. Okay, so the primary equation is assets is equal to capital plus liability, and by using the same equation, we can develop further equations which will help us to prepare these very accounts, which are in the form of trial balance, in the form of balance sheet, and in the form of profit and loss account. Okay, so now let's this much was the theory part of this topic. Now we'll look at some examples in our next session, and in the next session we'll start solving some practical questions on the term accounting equation. Okay, I hope I was able to explain all these terms to you. I hope there was no doubt remaining. Okay, if there's any, you can ask me anything in the comment section down below. We shall meet in the next session. Okay, have a nice day ahead. That's all from my side. Bye.